Thanks for joining me today for today's office hours live Q&A with you guys. So we're recording this again. I had a couple of questions from a few people reached out and wanted to make sure to get this over to a few people as well as put this on a YouTube channel for people curious. So my name is Victor Bell, founder, CEO of Bell Capital. We raise capital for multifamily real estate. Been doing this for 20 plus years, done over $59 million worth of real estate deals. And now we created a vehicle to help, everyday investors invest in multifamily real estate with us. So that's kind of a little bit about me. But today, which is something that we do on Wednesdays, is we actually have our live office hours call. So just from a few people that I asked, hey, what questions do you guys have that I can help? And had a couple questions come in, so that's good. But they kind of all really boil down to the same thing. Hopefully, you guys can hear me all right. Um, let's see. One of them, hey, if I raise capital for a non-real estate investment opportunity, how would I find the perfect people? And there's a couple of secondary questions on there. Or would it be people in the market or just people with big money? How do you find investors or people with money? That's basically the question. On that one, and that's from Richard. So typically with and now there's more to it than this. So I'm going to kind of shrink this a little bit, assuming that your paperwork is in order, meaning that you know what type of money the capital you're going to be raising, how you're going to do it, whether it's a syndication, whether it's a fund, a 506B or a 506C, Reg D. We do a 506C, which means that we can general solicit to the open market. You don't need to know me, and but there's some limitations to that because that means that person needs to be an accredited investor, meaning that they need to make $200,000 in income a year, a combined household income of $300,000, or they have a net worth of over $1 million, excluding their primary residence. So that's number one, making sure that you know that that's going to be happening, what type of fund, what type of investor you're looking for, and all your paperwork is in order. If you're going to general solicit, you can go to any platform, social media, Facebook, Instagram, LinkedIn, YouTube, X, join groups, things like that. You can pretty much do anything that you want online and offline. You can go and speak. But when you're speaking, you're not pitching your idea. You're just going to find people with capital that are interested in investing their money into either something, and you mentioned that into the business. So you're either going to start with the business or the business plan. Hey, I'm going to be, we talked about this, raising capital for a business. We deal with government contracts. We already have the contract landed, and now we're raising capital from investors to accelerate the business or to scale the business. So where you find the people with the money is you're just going to kind of look around. Number one thing I always tell people is start where you're at. If it's real estate, I'm a real estate guy, start where you're at. So in that situation, you're pretty much going to grab your phone and you're going to call, or you're going to make a list. Well, basically make a list of all the people, your power base is what we call it, your prospective investors. And you're going to break them up into groups. Those groups are going to be, hey, people who know you that are professional, people who are, know you they maybe have a professional business or maybe they're not professional, but they have some type of money, the wherewithal. And then there's also going to be people who are just in your network that have money that could be potential investors. And then you have this secondary group of people, or multiple groups of people, right? Forgot the numbers. But you're going to have the connectors, people who they may not be an investor for you, but they're connected to other people and their network may have money. So that way you can get introduced to those people. But that's just in your phone, or you're going to use social media. You can go through your Instagram account and you can just take a look at the person and go, hey, this person does a business. They don't. You can do the same thing with LinkedIn. I think other people use sales, like a sales manager or something for LinkedIn. Sorry, I'm not like digging in my butt or nothing like that. I'm pulling up my case. I'm sitting on it uh, for that purpose. So you can use that too. Hold on. So you can use the other resources and tools and stuff like that that LinkedIn has. Is the case, but that'll also help segment or segregate, like break up your list. So that way you can build a list of a power base, people who know you, people who are professional that know you. Because the people who know you that may not invest are important as well, because they're going to support your cause. The more people you can get to support you financially or just support your cause even if it's not financially, they'll share what you're doing with people. They're extremely valuable. That's called human capital. You need human capital as well, not just the money side of the capital. So, number one, have your paperwork together. Number two, you can get them from your phone because they know you already. Start with friends and family, and then you start with professional people that you know that are still connections. They're friends because they're connections. And then you want to go to people who are also in your network that are connectors. So they may not invest with you, but they have an audience. They have a group of people that you know. They can put you in the know so you get some credibility from them so people will actually listen to you and you can ask like, hey, what does your audience need that I can bring based on the opportunity that I want to present? Because here's what I'm working on. So that's where you're going to find your investors. And like we said, going to the mass public, you can't go out there and be like, "Hey guys, I'm raising money for a deal," right? You know, if you're so you need to get all those things in order first, but that's really where you're going to start. If you're doing like I'm doing, you can run an ad. You can be like, "Hey, I have a 506c." You don't tell people that you got a 506c, but you can actually advertise anywhere. CNBC, CNN, Facebook, Instagram, X, LinkedIn. You can run ads. You can do whatever it is that you want. Google stuff, billboards, wherever you think about it, you can do it. Because you have now, it costs more money to do a Reg D raise a fund, the paperwork. Um, but you're paying for the ability to go on, you're paying for the ability to publicly promote, right? Is really what you're doing. So, in that situation, the sky's the limit. You can just be as creative as you want, but you still got to do the right thing. So, I hope that helps. Where do you find the people? They're everywhere. Start family and friends first, and then expand your network. Put them in the buckets. Everyone who knows you, people who know you that can invest, people who know you that can't invest, people who are friends of yours business wise that could invest, and then connectors may never invest, but they're connected to people who can. And then after that, you can look at the advertisement second, or last but not least. So, but that was a great question. I mean, a lot of it is really that's what it turns into. It's like, how do you raise money? Number one, you need an opportunity to present to people. And number two, you need an audience. Without the audience, it doesn't matter how great your opportunity is, period. End of story. You always need an audience. It doesn't need to be big, but you need an audience. Um, and if you back your math out, if you're going to raise like us $50 million, right? Then you just need to know like, hey, if we're raising $50 million and our average, and I'll show you what I do. Hopefully this helps you. I go through this with the people I work with. Um, so if you need, let's just use simple math. If you need to raise $50 million, you just divide that by, let's just say you're just going to get $100,000 minimum. That's our minimum. You need 500 investors. That's all. And if you're going to do that over the course of, let's just say 6 months, you need to get investors of 100,000, 83 to 84 people a month. And if you're going to divide that, if you're going to work 6 days a week, right? You need 13 people per day. And if you're going to divide that down to how many hours a week you're going a day you're going to work, let's say you're going to do 6 hours on that, every six, 2 people per hour. Um, and then you just back your math out, whether that's going to be your advertisement dollars, meaning like your cost of your CAC, your customer acquisition costs or your client acquisition cost. You're going to break all these numbers out so you have an idea of how much you need to spend in advertising, what the cost of an investor is going to be, and then you're going to back out your closing ratio, your client show up rate, like things like that, like the people who actually show up to the meetings, your demos, your presentations, things like that. Um, we'll go over all that, but that's a great question. Thanks for asking that. So, and I apologize if I get long-winded. You're just gonna have to record this, or it's recorded so you can play it back and you can kind of break things down, and you can also get back with me as we go through a couple things. So let's see. This is the other one. What about getting funding? Okay. So I would assume that with this question, I'm not sure. I assume that getting funding means getting the loans for the properties. So there's tons of ways to get loans for the properties, and especially in multifamily, because we're talking about multifamily right now, not like Richard's press question, which was about the businesses. But for multifamily real estate, it is true. The deal will structure the financing. So if you don't understand how to underwrite a multifamily deal, you will always have a problem getting funding. There is unlimited amounts of capital out there to fund your multifamily real estate deal. Unlimited. It's ungodly. So I was like trillions and trillions and trillions of dollars dedicated to that one activity because lenders want their money in multifamily real estate. Here's the challenge. If you don't understand how to underwrite the deal, then you will have a challenge underwriting the debt. And if you cannot underwrite the debt, or if the lender feels like you don't know what you're doing, they won't give you the money because multifamily real estate is the equivalent of buying an operating business. So it's no different from if you buy a business, there's money everywhere to get funding for businesses, just like there's money everywhere to get funding for real estate. But if you can't underwrite the business, meaning you don't understand operations and the finance side, the capital side of real estate, because it's debt and equity are the two pieces of funding. If you can't underwrite the debt, you can't get the debt, right? You have to understand debt. The lender is your largest partner in your deals. So you can go anywhere. Realistically, the easiest way to find out who can lend money to your deals is to go online, go to LoopNet, go take a look at a multifamily property, and then call those brokers and say, "Hey, love the property. I love the location. I'm interested in if you guys have a debt person on your debt team that I can get in contact with. I know I can get the debt, but we're interested in seeing whether you guys like this deal or not, or something similar to it. I want to build a relationship with your debt guys." They'll do that. That's the easiest way to do it. Or you can look online and look up any loan. Like we use different groups, different lenders in different markets for different size multifamily deals. We look at institutional quality size deals, 200 plus units and above, better, class A properties, not a lot of heavy value add stuff. So we use like JLL, Berkadia, um, we use CBRE, who the other was, Newmark, things like that. So, but there's other ones. There's tons. Like, if you're going to do smaller deals, a little bit heavier value add, you're going to be looking at Marcus and Millichap, things like that. So just get added to their list of properties. And once you get added to their list of properties, they're going to start sending you deals through your email. And if you scroll to the bottom of that email, you will see a list of names of all the people that are on the deal team. So you have your acquisition, you have your salesperson, your associate, the person who's selling the property, offering the property, the analyst of that property, the person who put together the numbers and put it together in the package. And then you're also going to have the person that is on a deal team at the bottom of that email because they all have their contact information there on the list. So basically you just take it, copy that whole bottom part of the email and just add it to a spreadsheet because it's with that specific company. And you're going to just build a relationship with those debt people. Now, don't waste their time. They're not, if you call and you ask a bunch of questions, it's fine because you're listening to them and we'll go over, because you're on our program, we can go over what you ask, how you ask it. And if you're in my program already, you already know how to underwrite debt. So finding the financing, already understanding how to underwrite the debt before you actually talk to a debt person. One, because you underwrote the property. Two, because you underwrote the debt. Talking to a debt person confirms what you already know, or they're adding something you didn't know so you can make some adjustments. So as it relates to finding or getting funding, how do you get funding? That's how you're going to contact somebody who's either a commercial mortgage broker, commercial mortgage lender, or somebody who's specifically on a debt team that's in a brokerage that sells multifamily real estate. You're just going to pick up the phone and call them. But for simplicity's sake, how do you get financing? You understand how to write debt by you take a look at the 10-year treasury and you add 2 points or a point and a half to that. And that's probably going to be your interest rate when you're underwriting the property to figure out how much debt the property can support. So before you talk to a debt person and get the funding is what you're asking, you already kind of have an idea what they're going to tell you, and talking to them makes you seem more credible. So long, but some of these questions, these are great questions, but there's a lot to unpack inside of a very basic, how do you get funding? Where do you find the funding? How do you raise the money? How do you just look for people with money if you're raising money for a real estate deal? There's so much more to go. There's layers inside of these things, but I want to do my best to answer these for you. And here's another question, which is very similar to this. Like, direct us to what lenders can help us finance these deals, especially the big ones. All right. So, again, like I just said, you can go to Berkadia, you can go to CBRE, you can go to JLL, you can go to Cushman and Wakefield. Well, Cushman and Wakefield doesn't do a lot of multifamily in California or San Diego, but in other markets. So each market has their player. So usually, excuse me, if you're talking about bigger deals, they have a lender or a commercial broker or somebody who deals with debt, which is what's called their capital markets, on the team. So they've already looked at the financing and they package it all together, right? So that's where I would start. Just like I just said, you're going to get on a couple of lists. You're going to look at the multifamily property. You don't need to talk to anybody, but you need to get on the list so they send you stuff. At the bottom of the email for the properties, there's going to be a list of all the people that work on that specific property or in their shop, that brokerage shop, and it'll have all the debt people. It'll have all the contacts you need. Like real estate is a relationship game. It's a connection game. It's a contact game. It's a network of brokers, lenders. They all know each other. It's a good old boy network. It's primarily men. What else? They're very sophisticated people. They understand what they're doing. They are very compartmentalized. Deal guys and analysts don't always talk to the debt guys. The debt guys and the analysts don't always they're not always connected with the sales team, which brokers in commercial don't really call themselves brokers. If they're the main guy, main salesperson, they're a broker, but everyone below them are kind of what's called associates. I don't know why they don't just call themselves sales guys, but sales professionals. But anyways, if you're looking for the lenders to do that, you're going to have to connect with the big shops. And if you're going to connect with the big shops, you're going to need to know what you're doing. Um, you're not going to waste people's time twice. Be very intentional. Number one, about understanding how to underwrite a real estate deal, and also understanding how to underwrite the debt the way they underwrite the debt, not the way you underwrite the debt. You need to understand it from their perspective because, again, on a bigger deal, the work's kind of done for you. And you need to understand what you're getting into and if it's the right investment. And then, last but not least, you're underwriting the debt and the financing, but you also need to present in your head, how do I raise the capital? How do I raise the equity? And that goes right back to what I was talking about Richard. You need to understand what's considered, how do you raise the equity? Or the capital stack, right? You have your debt and then you have your equity, which is, below the debt. How do you raise the equity? Who do you talk to? How are you going to do it? What do you say to them? What is going to be your returns that you need to hit? Can the real estate hit those returns based on that performance of that property now and also in the future? What are you going to do? So it's very important to kind of have a couple of more things in place. I mean, I've provided a lot of training on this stuff, whether it's YouTube channel, whether it's our investor school, whether it's our program that we run right now, which is our coaching program, which is a 12-month coaching program, and then we have a 2-month program where we kind of fast track you into this stuff. So I go over that 1000, 100%. You need all those things. I share my documents with you. Because you need all this stuff when you're raising capital. Back to that, you're gonna need your operating agreement, your OA, your PPM, your subscription agreement. You're gonna need the tax information that you're gonna need. You're gonna need an investor portal. How do you set that up? What are your targeted returns? And the IRR, your equity multiple that you're going to have to present to them. What's the target? What's the timeline? What's your whole period? What is your buy box for the property you're going to be buying? Meaning, like, how many units? Is it a value add? Is it a non-value add? Is it a core property, meaning like it's great already, or it's a core plus, meaning like it's great already, but it needs a little bit of fluff. So, like, you need to know all this stuff. Like, there's a lot to this, guys. It's not that you can't do it, because I did it. I didn't work at a firm. I didn't go to college. I didn't get a degree. I didn't work on Wall Street. I learned finance, my background. I learned finance. I learned mortgages. I understood debt through doing multifamily real life, real time, through experience. There was no books, there was no YouTube, there was books, but there was no YouTube channel, there was no videos, there was seminars, but it's like they didn't teach this stuff this way. It wasn't this detailed. Um, so I'm here to help you, and I hope this does help. So one, finding the financing. Go to brokers, look online, get registered, get added to their list. Those lists have connections to the lenders, and that's how you're going to get financing for the deals if you're just looking for the debt. For Richard, for that question you asked about where do you find the people, that counts for business and multifamily real estate in general, is you're probably going to have to start with family and friends, people that know you, like you, and trust you already. They don't need to know you, like you, and trust you for your real estate deals or your business acumen and how great you are. They just need to know you so you can have a conversation with them and you can kind of bounce back and forth and ask them questions. What are you looking for in investment? Do you have the capital? Or are you liquid? How much were you looking to invest? What are your needs? Do you need cash flow? Do you need tax write-offs, appreciation? Do they have a business? Are they professionals and they work? These are very important things you got to find out when you're raising capital, but you need to do it the right way and you need to be legal, compliant, And let me be honest with you guys, that's not free. That costs money as well. So, you're going to spend tens of thousands of dollars on legal, and you should, because it should protect you and it's got to protect your investors. This isn't a joke. Take this very seriously when you are responsible for other people's money. I take people's money very seriously, and you should too. So, this isn't a fast buck. This is a long-term investment play, and this is people's livelihoods, and I think it's important to know that going in the door. So I appreciate you guys. I hope this helps. I went through this pretty quickly. This is going to be one of the last ones that I put up on YouTube that I can assume right now, unless more people find value in this, and then I'll consider bringing it back. But we're moving into something pretty big right now, specifically for our investors. There's a major opportunity happening right now in the real estate market, the debt space, the interest rate space, all the stuff going on with the lowering of the interest rates, the end of this year, bonus depreciation coming back. A lot of deals are going to be coming up, and me and my team are going to be extremely focused on raising capital, closing deals, and taking care of our investors. So I want to help you guys. We're here to do that. If you want anything, go to bell-capital.com/free training. I think that's what it is. We're going to be doing a free training where I'm going to be walking you through exactly what I'm doing, how I plan on taking advantage of the opportunity in the market over this next 12 to 18 months, and sharing with you exactly what I'm doing. So either you can do it or you can do it with us. That's my goal. My intention is to have you do it with us, but I want to share with you what I'm doing so you can say, yeah, I get it. I want to do it with you, or you don't and you want to do it yourself. I'm here to support you in that as well. We have programs for that. We got coaching. I want to bring together a big club. But the big picture here is I want to take care of my investors. And I know you do too if you're going to be one of them. And I appreciate you guys. So have a great day today. Like this video, share this video, comment on the video too if you got some value out of this thing. I really want to hear from you, and let me know how I can help with anything that you need, and I'll do that. All right. So yeah, let me know if you guys need anything, guys. Have a great day today. Let's get after it. Boom.